Okay. So, good morning, learners.
Good morning.
Okay, welcome to this class. Last week we looked at accounting principles and concepts, and today we are going to look at something else, which is bookkeeping of double entry. So we will look that today. So without wasting a lot of time, let's start. So I want you to tell me if you can see my screen. I want to share my screen and I want you to tell me if you can see what I have shared with you. I'll share a PowerPoint presentation. Can you see the PowerPoint presentation?
Yes.
Okay. Meanwhile, I have also sent you a link whereby you are supposed to sign your attendance register. So make sure that you sign so that will not be marked that you didn't attend this class. So now we can begin. So today we are going to talk about double entry bookkeeping. I don't know whether any of you has ever heard about double entry bookkeeping, but that is what we are actually going to do. We normally do it in our day-to-day lives without our knowledge, but now today we are going to know to learn how to do it even like now we do it in books other than just doing it without our understanding or knowledge. So some of the objectives that we have today is to understand the nature and concept of double entry accounts. You will also learn how to enter the transactions correctly into accounts, and then you will be able to balance off accounts at the end of accounting period. Okay, now the next slide is that we are going to define what is double entry. And we can say that double entry, in very simple terms, double entry is the process of recording a transaction on one account and recording a respective account with the same amount that we have recorded in the other side. So to make it simpler, let's take an example of when you go to the shop and you want to buy one packet of unga. So when you go to the shopkeeper, what happens is that you will give the shopkeeper your money to get a packet of unga. You will have increased your unga. So that is an increase, a plus and debit, and you will have decreased your cash in your pocket. That will be a credit. So if you bought that unga at 100 shillings, you are going to debit your unga account with 100 shillings and you are going to credit your pocket or your cash with 100 shillings. That is what we normally call a dual aspect concept. So uh, when it comes to double entry, we normally have the accounting equation, which are assets equals to liabilities plus owners. So, for example, when you go to the shop and you borrow the shopkeeper a packet of unga, that is a liability. And now, in that liability, you are credited because you have borrowed. The packet of unga that you have bought is the one which comes on the debit side. So that one, let me demonstrate with this account. So this aspect of debit and credit. Now, when you buy your unga, you see where we have written all assets. You can just put unga account there. You put the amount of unga here. Like for example, you put it here. This is unga. Of course, you normally put the date, like for example, today is 21st, 01, 02, 2024. So here you will put your unga, assuming that what now we are creating here is the unga account. This is what we are supposed to do, unga account. Now, when it comes to your cash, in your cash account, you are going to credit. This is a cash account. You are going to credit with the same amount. This unga, assuming that this unga you bought it at 100, you are going to credit 100 here with unga. So what we normally call dual double entry is now this debit and this respective credit. That is what we call dual double entry. And in accounting, that is the principles that we are supposed to follow so that you make sure that your accounts are correct. Because you remember in fact the first week we said that the reason why we normally provide financial information is for the users to use them. For example, someone might be wanting to buy some shares from your company. That is a user, an investor. So if your accounts are not correct, these financial users are going to make misinformed decision based on the information that you have given them. So we have different types of fixed assets, which are like motor vehicles. I know some of you have motor vehicles. You have land, you have fixed and fittings, you have chairs in your house. Those are some of the fixed assets. The liabilities are what you borrow from now that shopkeeper. The equity is your share capital and reserves. Revenue is what you sell, and expense is the money that you spend while you are making your sales. For example, traveling, printing, and stationery, salaries, and such. Now, let's go to something else. Now, let's use this example because I had already given you this example. When it comes to trial balance, a trial balance is a statement that shows all debits and credits of double entry. The debits must be equal to the credits, and if there is any discrepancy, then it means that there is an error in double entry record that in the ledgers. So, for example, you see this first example that I showed you for when you went to buy unga, you debited unga and you credited your cash account. Supposing you forgot, you just debited your unga but you forgot to credit your cash account. It means that this trial balance here, you will have your unga here. Let me even demonstrate that one here. You will have your unga here. You debit it with 100 shillings, but you will not have anything else. Meaning that here, totals here, you are going to have a total of 100 shillings. And here you are going to have a total of 0 on this side. This side you are going to have a total of 0. So you can see already this is not correct because our debits, these are our debits, are more than our credits. So the reason why we normally have that dual aspect of accounting is to make sure that the trial balance balances. So for it to balance, what are we supposed to do? We are supposed to say our cash here, you credit here. So once you credit it here, now our account has balanced. And now when you give this information to someone, whoever wants to use that information, they are going to make informed decisions. So that's it. Do you have any questions? Learners, do you have any question? Do you have any questions? I want to hear your voices.
No.
Oh, so
No.
okay, that's good. So now let's go to the last bit of our study. Now we have prepared our trial balance, whereby we have debited our unga and we have credited our cash and our trial balance adjust. So this is what now we call adjusting entries. Like at the end of the year or of the month, you are supposed to do adjusting entries to make sure that your trial balance balances and there are no differences. So in this example that you can see here, the first thing is to post this entry in a general journal. The second thing is to transfer that amount in the general ledger. And the third thing is to transfer that amount from the general ledger to trial balance. So you see this one, we sold some goods which were worth 25,000. We debited our cash and we credited our sales. In our general ledger, we opened an individual account for each account, which is cash account and sales account. We debited our cash and we credited our sales. When we go now to the trial balance, here we are going to increase our cash with the 25,000. So here it will be now 25,100, and we are going to not to credit. Sorry, we are going to debit our cash with 100. So when you debit with 100, 25,000, we are going to get 24,900. So because we have this credit of 100, that one we remove. And then we will also have our sales. Sales here. Here we will have our sales here, which are 25,000, 25,000. So when you balance off, this 100 plus 24,900 will be equal to 25,000. This one will be now 25,000. And also this other side, we will also have 25,000. And this is how a typical trial balance should be. The debits should always balance with the credits. Okay, now we are going to conclude. Today I just wanted to introduce the concept of double entry bookkeeping, the concept of dual aspect. I show you the importance of dual aspect, and then next week we are going to talk about, we are going to do an example of what we have learned today. So, is there any question before we conclude?
No.
No.
Okay, that's good to hear. So next week we are going to do a practical question on this, on what we have learned. I hope that everybody has submitted their attendance. And then 2 weeks after today, you are going to have a cut so that I test you on chapter 1, which is accounting concepts and principles, and chapter 2, which is now double entry. So please make sure that you are reading, make sure that you are revising, and when you are working with accounts, you don't do study alone. Make sure that you study with the other learners, because it will be easier for you to understand when you revise and you study with other learners. So I wish you all the best. Is there anything that we need to discuss about before we finish the class?
No.
No.
Okay, then see you next week, and thank you for attending the class. Bye.
Bye.
Okay.